Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fataki. And what a wonderful end to FY24 this is going to be. The markets are at our all-time high level also, which stands at 22,526. So we're now less than 200 points away from that. The Nifty is up close to about 1%. The sensex has gained 1%. And just to round up, how FY24 has been, this year we've seen the Nifty rally 32%. The mid-cap index rally 65%, 63%, and the small-cap index has seen a gain of close to about 75%. Yet again, like yesterday, Hormuz, it's the heavyweights, the large caps, which are doing the heavy lifting, and banks have come to the party today. The Nifty banking index is up more than 500 points.
It's not very often you get to say it for 2 days in a row, right?
Yes.
The large caps are outperforming the broader markets, but they are. And that is what's happening in the market today. And we were talking about levels in the morning where 22,200 was that hurdle that the Nifty was failing to cross. And once it has, it's been a one-way move there. Now 22,370 as we speak on the Nifty, and the contributors as well, all of them, as Reema was highlighting, financials, HDFC Bank, ICICI Bank, Bajaj Finance, all of them leading the charts in today's trading session. But the particular sector that is doing extremely well are PSU banks, and most of these PSU banks are the top gainers on the Nifty mid-cap index. If you can pull those stocks up, Bank of India, Indian Bank, Bank of Maharashtra, you name them, and they are doing extremely well for themselves. The PSU bank index is up 2%. Bank of India is up almost 3% at the highest point of the day as we speak. Indian Bank, Bank of Maharashtra is up 4.5%. So they are doing very well for themselves. Among the small caps, a couple of names that I want to highlight though. Century Textiles is one of those names. That stock is gaining almost 9% in today's trading session. So that is good going for Century Textiles. And the other one is VIP Industries. Remember, we featured the management on our show Inside Out, where Nigel spoke to the management and they had shared some very ambitious growth targets there. They shared the same with an analyst meet yesterday, and the street is receiving this very positively. 15% higher now on VIP Industries, the best single day gain that the stock has seen since August of 2021. But let's begin the show by focusing on some of the other big movers. As I said, Bajaj Twins are the top Nifty gainers this morning following reports around Bajaj Housing Finance's IPO. Vamakshi is joining in with the details. Vamakshi, tell us more.
These counters are surging in the trading session today. There was a report that came through from Money Control, and they highlighted, and definitely this is a source-based information, they said that Bajaj Housing Finance has initiated preliminary talks with several investment banks about a potential IPO. Now, a couple of things to keep in mind, that Bajaj Housing Finance is an unlisted company, but Bajaj Finance holds a 100% stake in this company, and Bajaj Finserv in turn holds nearly 51.42% stake in Bajaj Finance, which gives it an indirect holding in Bajaj Housing Finance. Now, the IPO could be at a potential valuation of around $9 to $10 billion, and this move is in line with RBI's mandatory requirement for upper layer NBFCs to list within 3 years of being notified, the deadline for which was September 2025. Sources said that this deal could, however, likely be kicked off in the coming weeks, and the IPO is likely to be a combination of primary as well as secondary issue of shares. But keep in mind that we have not gone ahead and independently verified this report. Now, just to give you a brief perspective about how the company's financials is shaping up, Bajaj Housing Finance reported a jump of almost 31% in the AUM to 85,929 crores. Disbursements also rose by almost 31% to 25,300 crores, while net profit has gone up by almost 41% to 1,350 crores. But on the back of this potential IPO, unlocking value for both Bajaj Finance as well as Bajaj Finserv, both of these counters are surging in the trading session today.
Okay, thank you very much for that. That's, of course, the top Nifty gainer, 4.5% up. But Dr. Reddy's is the other big mover. This is after the company signed an agreement with Sanofi Healthcare India. Ekta joins in with the fine print. Ekta.
Thanks for that. Well, yes, Dr. Reddy's has announced an exclusive vaccine distribution deal for...
Once again trained her eyes on gold. Manisha.
Well, thank you for that. Yes, I have, because we are inching very close to those all-time highs that we've seen in the month of March itself. So when you look at this quarter now, we are up by more than 7% in case of gold there. Strong factors really coming in because of the expectation that the US Fed and the European Union also would go ahead and cut rates in the next quarter itself. Well, if you look at the Indian prices here, we've seen an all-time high of 66,943. Not too far away from there, 200 or 300 rupees away from those all-time high levels. What the street is watching out for for now is the US inflation data. Well, that comes in tomorrow. Apart from that, it is also going to be about the US data. As of now, we are dealing with durable goods data, which has been on the positive side. If inflation also comes in on the stronger side, then there could be some pressure on the prices. But interestingly, the global central banks have continued to buy gold. Actually, if you look at the Indian central bank itself, RBI has bought around 4.7 tons in the month of Feb. And what we are standing in sense of the RBI gold holdings at around 817 tons has been an all-time high. So Indian central bank also sitting on a gold reserve, which is an all-time high at this point in time.
Thanks a lot for that, Manisha. You need a gold medal for all those gold investors who invested early on when the prices were hitting a bottom. But as we slip into a break, we have a big announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate the Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, the 11th of May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There is a lot to learn and lots to do as well. Now, whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance to register now. Scan the QR code to register or log on to cnbctv18.com and we'll see you on the 11th of May.
Welcome back. Climbing higher now, 22,370 on the Nifty. It's now a 250-point up move. At any point of time, if you had bought into the market since morning, you would have made some money. So this is turning out to be a very, very strong session for the markets. And now the mid-cap participation is also picking up. The mid-cap index is trailing the frontliners in terms of the gain, but it's now up close to about 0.4%. Some stocks which deserve mention. Angel One has been a big mover. Yesterday up 9%. It's followed it up with a 3.5% gain. Biocon, where there is news, Ekta spoke about it. Cyient has gotten into a partnership with the company, so that's up. PCBL, Philips Carbon Black, they have issued 1.6 crore warrants at a price of 280 rupees. I think totally amounting to about 448 crore rupees. So that's pushed up the stock higher. These are some stocks which deserve mention. IDFC First Bank continues to trade with losses on the back of that block deal. Ambuja Cement news coming in where the Adani Group parent, the family, has increased their stake by 3.6% to hit 66.7%. So a big thumbs up, a vote of confidence. Also goes to show that perhaps all the troubles which beset them, about more than a year back now appear to be behind it, with the Adani Group going out and making acquisitions, whether it's for Adani Ports, Adani Power, and now even upping their stake in Ambuja Cement. But back to tracking the big mover, Chalet Hotels is surging after it launches its QIP. Vamakshi is with us with the details.
Well, Chalet Hotels is definitely in focus today. The company has launched its QIP and sources tell us that they are looking to raise up to 1,200 crores. The base deal size is worth 1,000 crores with an option to upsize up to 1,200 crores. In fact, very recently, the company had obtained an enabling resolution to raise up to 2,000 crores from the board. Now, in the Q3 con call as well, the company had stated that it would like to keep gunpowder ready in order to pursue some inorganic growth opportunities. Now, coming back to the QIP, Chalet's QIP floor price is at 780.76 rupees per share. Now, when we compare it to the closing price yesterday, it is actually coming in at a discount of almost 10%. The issue price, however, for this QIP is expected to be determined on April 2nd, depending on the kind of demand this QIP receives. But on the back of this QIP launch, we have Chalet Hotels in focus today.
Thanks a lot for joining in, Vamakshi. Off the day's high, those Chalet Hotels, but still trading with gains of 3%. What's also doing very well today is Aegis Logistics, and that is surging in trade after IIFL Securities initiated coverage on the stock. Mangalam is here with the details. Mangalam, what is IIFL Securities citing as its rationale here?
Well, some of the big things that IIFL has spotted in Aegis Logistics is that it's a formidable player in both the liquid and gas cargo logistics with nearly 2 million kiloliters liquid capacity and almost 10 million metric tons per annum capacity at 7 key locations for their gas business as well. And the company operates on 60 to 90% EBITDA margins for both their liquid and gas storage business. And through FY26, they expect the volumes of the company to grow anywhere between 17 to 35%, leading to an almost 20% net profit growth as well. Why is that? Because the company has already increased their capacity, and secondly, they have plans to scale their capacity a lot more. For liquid, almost 83%, and gas by almost 104% by incurring a capex of 4,500 crores all the way up until FY26. To add to that, they've also, gotten Vopak as a strategic partner at some of the key locations. Now, that's an international player. This is a step to de-risk operations and bring in global expertise, which is why they're positive on the stock at current valuations. They believe it's a buy with a target of close to 500 rupees. But just bear in mind, one of the risks is delays that the company may have in project completion. So if you are mindful of that, then maybe, the thesis that IIFL has is working for Aegis Logistics.
Okay, big up move on the stock, 500 rupees target price. So even after this 11% gain, they are seeing a 13% gain upside. Now moving on, ICICI Securities and ICICI Bank. Now shareholders of ICICI Securities have approved the delisting of ICICI Securities and its subsequent merger into ICICI Bank. So going ahead, ICICI Securities will be a wholly owned subsidiary of the bank. Vamakshi is back with us for more. Vamakshi.
Well, both of these counters are in focus today. ICICI Securities, like you rightly pointed out, has received the approval for delisting and then subsequent merger with its parent. Now, interesting to note that nearly 83.8% institutional shareholders voted in favor of the proposal, but only 32% of non-institutional shareholders were in favor of this proposal. However, given the large institutional holdings in ICICI Securities, the proposal was cleared. Now, when we look at the swap ratio for this transaction, it is 67 shares of ICICI Bank for nearly 100 shares of ICICI Securities, and as per the last closing price, the swap ratio actually favors ICICI Bank shareholders because ICICI Securities is being valued at a discount of almost 2%, and therefore when you're seeing the move on both of these counters, ICICI Securities is declining in trade while ICICI Bank is surging in the trading session today.
11 to 12 has suddenly become Vamakshi's busiest hour. Thanks a lot, Vamakshi, for joining in there. Not a good reaction from ICICI Securities, now almost 4% lower on the stock there. But ICICI Bank, 1.5% higher, contributing to the nifty gains, and that is what matters, I guess, to the bulls.
Yeah.
And they are doing very well.
Because I think some of the other large cap banks are not participating to that extent. Axis Bank is absolutely flat, and the last time I checked, I think even Kotak Mahindra Bank had a very muted gain. Now Kotak Mahindra Bank has actually picked up, through the course of the day, but Axis Bank is not participating. There you have Kotak Mahindra Bank in the morning was flat. But, in the last 1-2 hours, it's seen some.
But I guess what matters more is HDFC Bank is turning up the heat and they're performing well. And that is what is giving the bulls a lot of heart. But good time to get in the technical check on the markets. Now, Jay Thakkar, Head of Derivative and Quant Research at ICICI Securities is joining in. Jay, good morning. Thank you for joining in. Now that we are past 22,350, does the path to 22,526 become much more easier now? What's your call on the index?
Hi, very good morning, and this has been an amazing day on a day of expiry. We have seen this kind of a move coming in market, more than a percent move. Generally, on a day of expiry, we see 1.5% kind of a range, or 1.5-2% kind of a range on Nifty. I mean, if we look at the last 5 years of data, 90% of the time it has happened so that on a day of expiry, we see this kind of 1.5-2% range. That's the difference between the high and low. And today we have been seeing that kind of a move in Nifty, and that's well supported by the Bank Nifty as well. I would say that yesterday was the Bank Nifty monthly expiry, which happened on Wednesday. Well, that's for the first time. Now onwards, it would be happening on Wednesdays only. So that was quite sideways. I would say it was within that range of say 47,000 to 46,500. That range has also got broken out on the upside, and that has shifted the base now to 47,000 immediately. So till those levels on Bank Nifty are held, I mean, cinching towards 47,500, 600 on an immediate basis. And post that, you can see 48,000 as well. So Nifty is well supported by banks as well. I mean, we have seen some good private sector banks also providing a good breakout on the upside, which may further help Nifty to inch towards that levels of 22,500, 525, which we have seen at the all-time high levels. And keeping this view in the mind, I mean, the short-term view is positive. I have 3 buy recommendations. The first one is from the banking pack. I mean, that's on HDFC Bank, which has finally provided a breakout after a long consolidation. So it's heading towards 1,500, 1,520. Those are its 2 short-term targets. One can place a stop loss below 1,445, go long there. Second one would be from the energy basket, petrol and LNG. That's consolidated quite a lot now. So it's trading around the levels of 267, 68 range. So Petronet can be bought at current levels. Targets on the upside would be 285, 300. One can place a stop loss at 255 and go long here as well. And the final recommendation would be on Ultratech Siemens. I mean, I just heard about the Amuja uptake, but Ultratech too seems to have completed its short-term correction. It has got a good risk reward. It's trading around the levels of 97.75. One can place a stop loss at 96.75 and target 10,000 to 10,200 in the short term.
One quick question, Jay, on VIP Industries. That stock is unstoppable this morning. It's after a prolonged period of underperformance. Now it's finally breaking out of that 500 to 520 range. What's your call there? What are the charts suggesting?
Well, see, no, VIP had, as far as I understand, a good analyst call yesterday as well, and we have seen a good up move or a jump today. So this stock had provided a clear downward breakout from a huge consolidation, and after this call, or probably after getting too oversold, this stock is jumping back now. I would say that the bounce back maybe for the day is over. The overall reversal for this trend may happen above the levels of 575 as far as trading is concerned. I mean, the stock looks positive, but from the trading angle, I think the reversal would be confirmed above the levels of 575.
Okay, thank you very much for joining in. We'll slip into a break. We'll turn our attention from the technicals to the fundamentals. Unmesh Sharma joins in on the other side.
Welcome back to Trading Hour. The market continues to remain where it was at the highest point of the day. It's a terrific Thursday as far as the bulls are concerned. The Bajaj twins are leading the charge on the upside. Bajaj Finance, Bajaj Finserv, both of them are trading very well for themselves. So pull up Shriram Finance as well. That is the first day for the stock as a Nifty 50 constituent to see how the stock is doing there. And not a very good debut, I guess, 1.5% lower on a day when the markets are doing very well. The newest Nifty stock is underperforming. That is Shriram Finance for you, 1.5% lower. Unmesh Sharma from HDFC Securities now joins us to discuss market fundamentals and his top sectoral picks. Unmesh, good morning. Thank you so much for joining in. I'd want to speak to you first about banks. Now with earnings season around the corner, a lot of banks would come out with their business updates as well. A lot of banks have also highlighted deposit growth to be a challenge going forward. What is your call? Where do you find value within the private and the PSU banking space? Do you have a particular preference there?
So, yeah, good morning. So last trading day of the year. So, we are obviously seeing all the buoyancy of that and the expiry coming in. On the banks, I think if you look at the way we have positioned our model portfolio, we are actually, while overall financials, we have a slight underweight. I think on the banks, especially on the private sector banks and the large public sector banks, we are still quite positive. And this is across market caps, because the way in which we think about this is that, yes, there is some stress, some pressure, I would say, not stress, but some pressure on the deposit growth. But at the same point in time, for well-capitalized large banks, there is a fair bit of runway for growth going even from here. And on a relative value basis, they continue to look good. So if you look at our model portfolio, we have a fairly buoyant positions on things like SBI amongst the large PSUs, and then Axis and ICICI. So that's how we are playing this.
So Axis, ICICI and SBI are your preferred picks in the banking space, right?
Yeah, that's in the model portfolio as well. Yeah, large banks basically, large banks with good deposit franchise. Yeah.
Got it. What about consumer staples? They've underperformed, but going ahead, also the expectation is that volume growth will remain muted. The margin expansion tailwind is behind with raw material prices going up and the base effect kicking in. So on consumer staples, any of the stocks make it to your buy list or in your model portfolio?
No. So this is one of the big calls that we had made last year itself. You may recall, even September before, we were discussing this same question, and our research team was quite negative for two reasons. One is that, yes, in an inflationary environment, you tend to see some earnings growth, but the volume growth was not coming through. And the other was that valuations never gave us support from that perspective. The underperformance is something that we are not surprised about. In fact, so on staples, while, if you see across the market, given where the valuations are, we have brought everything closer to the benchmark. But at the same point in time, continue to remain quite underweight on this. The only ones where we are close to benchmark actually is ITC, where we are kind of equal weight. But on the others, we are taking bottom-up calls where we are seeing earnings growth, like United Spirits, Crompton Consumer. That's the way we are playing this. So not expecting any major buoyancy from the consumer to come through.
So United Spirits and Crompton Consumers are overweights for you in your portfolio?
Yeah, in the model portfolio, yes.
In the model. And in IT, any changes in your model portfolio in the run-up to the earnings?
Yeah, so look, what we've done is in the IT space is that the way in which HDFC Securities looks at the information technology space is also to look at things like market infrastructure, because that's really tech-enabled ecosystem, even though it may not appear in the index as information technology. So if you look at whole IT, we are equal weight, but actually that is not because we have an overweight on the services companies. Infosys is our equal weight, but other than that, the way we have played this is that very selectively where we can see earnings upgrades coming through Emphasis and TechM is there, but we also have MCX, the stock exchange, and actually IT services in a sense, which is team leads. So that's how we have constructed the portfolio. We are not looking at services themselves. We've taken some money out of the services and given it to the IT-enabled enablers, so as to speak, market infrastructure to create a portfolio.
So in IT and IT-enabled services, Emphasis, TechM, MCX, and team leads would be your picks in the model portfolio.
Yeah, and BSE, because we are overall on the exchanges, we are positive.
And I was going to ask you about BSE, Unmesh, that you answered that as being your overweight. I wanted to stress a little bit on that consumer side, on the durables bit. You highlighted Crompton Consumer as one of them. It's early summer already. You can all feel the heat here in Mumbai. But how have you conducted channel checks within these durable names like Crompton, Voltas, and all these AC manufacturers, Blue Star, such companies? What are the channel checks suggesting? Because Crompton had an analyst meet recently. They said that they are expecting robust demands for fans going forward. Is there a channel check, and what is it suggesting if you have conducted one?
Yeah, so there was a note I think we wrote about 4 weeks ago where we were looking at the early stages, because the inventory kind of build-up starts to happen earlier in the season. And at this moment in time, the expectation is that we are looking at a very robust season. Beyond that, honestly, specifically on the summer, we don't have much to say. But yeah, that is in line with what we are seeing.
We were chatting with Vijay Sales earlier, and they were talking about a 15 to 20% kind of growth on a year-on-year basis for the room air conditioning business. And particularly last year also had a fairly muted base in February and March. Anything on the power side? I remember you were quite bullish on some of these power names. Considering stocks have run up quite a bit, PFC, REC, BHEL is up to 50% in the last 1 year. Any change in your assessment?
So power, we split up into two parts. One is obviously, okay. So top down, as we have discussed in the past as well, and given where markets are, we are a bit defensive in our portfolio. So what you will see is that if you add power and utilities, we have a 3% kind of overweight position, which is 6% of our portfolio is power. Now within that, the index name is NTPC, where we have a slight overweight. But what we've also done is, bottom up, there is CESE in there. But what you will notice is that what we have also done is that, given that we have increased the cash in our portfolio a little bit, we've also put some of that cash to use in PG InvIT. So while it looks like there is a serious overweight on power, some of it is actually a kind of quasi-defensive move to put it in the power grid InvIT. So that's how we have constructed it. So yes, we are overweight, but that overweight kind of is looking a little bit more positive because of this defensive bet that we have taken on InvIT.
What about pharma, Unmesh? It's such a wide spectrum. Every company has its own speciality. You've seen a lot of deals being signed among companies, with one recently being done with Dr. Reddy's and Sanofi, Cipla and Sanofi. Biocon recently got a drug approval, diabetes drug approval in the UK. That stock is doing well today. What is your call on pharma, and is there a pecking order that you have within these pharma names? Is there a particular specialty that you're focusing on?
Yeah, so we have a new pharma analyst. He's actually come out with a flurry of reports. In fact, it would be interesting, just to discuss that separately. But we have gone from an equal weight in pharma in any case, and it works very well because one, it is very well exposed to the growth markets. The other is that it's also kind of quasi-defensive in nature, and on top of that, we have some fairly high conviction calls. Sun remains Sun and Dr. Reddy's, we have an equal weight. Okay, but the ones where we have a significant overweight, Cipla, Torrent, and Divi's. Now, is there a common theme running through? While yes, there is some positivity on the domestic business, but it's really, as you rightly said, very stock specific. Every one of these companies is now, operating in unique markets, has a unique product set. So we are overweight, which reflects both our defensive bets as well as our positivity on names like Cipla and Torrent.
Running out of time, Unmesh, so very quickly, I wanted to get your views on the luggage manufacturers, both VIP and Safari. VIP, the analyst meet, very bullish commentary coming in from the management. The stock is doing very well, but on an absolute basis, it's been an underperformer compared to Safari, but now has valuation comfort. What among the two do you have a call on, if you do have one?
No, unfortunately, we don't cover the luggage guys, but what we do have a positive view on is the fact that we believe that domestic travel, in fact, tourism in general is going to be a big theme. That could be one way to look at it, but no specific view on either of these things.
All right, Unmesh, we'll leave it at that. Thank you so much for joining in and sharing your views on a lot of stocks today. That was Unmesh Sharma of HDFC Securities. We'll pull up the 12-month comparison there between VIP and Safari, a very interesting one. Was just appeared on your screen. As I mentioned, VIP has been an underperformer compared to Safari over the last 12 months. Then while Safari is up over 80% over the last 12 months, despite today's 13% surge, VIP Industries is still negative territory over the last 12 months. There you can see there, still down 7% over the last 12 months, while Safari is up 80% despite correcting from the highs of the year. Time for a short break here on Trading Hour. We'll get you more on the markets on the other side. Stay tuned. Back on Trading Hour, and as we call time on this episode of the show, earlier we spoke to Anand Shah of ICICI Prudential AMC to get his outlook on the market, listening to his top sectoral bets. But from Reema, myself and the team that put this show together, thank you so much for watching. Halftime Report takes the action forward.
We've been consistently for last 2 years been more overweight manufacturing allied. We have been remained underweight on IT. And yes, we did get some bit of a relief rally in IT stocks more recently, but the challenge remains that in the year 2021, 2020, you had very strong growth, given that businesses could invest in IT as they had very little less expenditure to do on office and travel. I think that's coming back, and to that extent, the growth expectations for the IT companies needs to be reset. And I think that's what the journey the investors are going through for last 2 years. Our view is urbanization leading to growth in the housing will be the key driver, apart from manufacturing, manufactured exports, manufactured goods exports, where again the focus of government is significant. Would be the key driver, and in whichever way you look at it, infrastructure, housing, the cement would be the key ingredient. So we've been underweight on cement for a while, but that's one sector which will have as and when we'll have a good growth, would have good operating leverage, given that the pricing is weak, pricing has a room to go. Apart from that, corporate banks, the banks which would be also beneficiary of recoveries from the past NPAs,